Good evening, friends, and Thursday being a exclusive day for our PMS customers. So things are looking little hazy. I should admit that the market is giving very confusing signal. On one hand, cryptocurrency, that's the bitcoins, have gone significantly up. At the same time, market has turned little cautious. Now, if the crypto start going up, that means there is a risk-on strategy that is happening in the market. If the risk-on strategy is on, then why some of the small and mid-cap companies should come under pressure? That's a one kind of a opposite direction the market seems to be giving signal. One school of thought suggests that people have made more money in the equity market. That money seems to be going and flowing through the cryptocurrency. Now could be one plausible reason. Another reason seems to be that when they call halving kind of something, the word kind that they call it, where for you to mint bitcoins, the value or the price you get comes down. So that will discourage more bitcoins to come in the market, and that's a demand supply situation that is creating prices to go up. I seriously do not understand that logic. Why should Bitcoin surge so much in the 2025 days? I have no logical answer. I'll be very honest with you. And that makes me worry that if any assets class which gets bubbled, it does create a problem for the other assets class. We know what happened in China. The crisis in the real estate created problem for the equity market. And it can happen vice versa also. So something somewhere creating a bubble. No, I'm not saying that bitcoins are going to go down tomorrow. I'm not saying so. What I'm saying is that if in case bitcoins are going in a bubble zone, it has a potential to impact equity market. And I think that's a little cause of concern, because something that goes up too fast, too soon, always creates a problem. Because the law of gravity has to apply. And my observation with any assets class, steeper the up curve, more steeper the down curve. And that may happen with the bitcoins, and that could have a collateral damage to the other assets class also. Rate of interest are going up, and I think the data which has come for the consumer CPE, price expenditure, it seems that it has gone up in the US market. But things are, as I told you, while every expert you talk to, everyone says that markets look frothy. There has to be corrections. But somehow, no meaningful corrections coming. Like yesterday, market did go down. Am I right? And today, I think the market was up, if my memory serves me right. I don't know. 1 minute. Let me just check. I think today the market was up. I did not check what was the market today because I was busy with some other presentation. But market was up today. Yeah, today market was up. So, one doesn't understand basically why something has to go down so drastically in one day, and there's nothing changed today. Am I right? There is no news that come in that could lift the sentiment. And there was no news yesterday also which should have pulled down the indices. We have maintained, and we are again saying, please be careful. Market will surprise you. Market, when you expect the least, that time that event can take place. That's what the beauty about the market. So one has to be really very careful about what needs to be done, what selection you do, what stock selection you do, what market cap exposure you do, and so on and so forth. So have a small presentation and then we'll definitely open the floor for question and answer. Just a disclaimer that investment in the securities market is subject to market risk. Please read offer documents carefully, and past performance is no indicator of future returns. Now, if you all know that we promised that we are going to shift from small cap to large cap, we'll actively do profit booking in the mid cap, and we have done that. One is that you talk about and you don't do it. Here we take actions immediately, and just to give you an idea, fortnight back, that is 15 days back, our large cap exposure was 17%. Today, not today, that's a wrong statement. As of yesterday, it has gone to 65%. It has increased substantially. The mid cap, which was 57%, has come down to now only 31%. And small cap, which was 26%, is now gone to minuscule 0.4%. In other words, we believe in what we are saying and we executed that. I know many of you would not have guts to actually get out of small cap in the anticipation that small cap can go up. We don't so we may be wrong. I'll be very honest with you. It's not that we are very certain this is going to happen, but we have a fiduciary responsibility to manage your money, where we need to ensure that we take a very, very measured steps to reduce the drawdown and increase the returns. And that's exactly what we have done. Neither in our Infinity portfolio nor in our PMS portfolio, we have taken such a high exposure of large cap to 65%. If you remember, our small cap was 60% in Sol. Mid cap would have been 30% and large cap would have been 10%. Even if you combine power and Sol, this is a combined power and Sol, never in the history we have taken such a high exposure to the large cap. And the reason is very simple. We want to protect, in case if the market has to correct for any reason, you don't take a beating too much. Of course, I'm not saying large cap will not go down. They may also go down, but the decline would not be as sharp as what is there in the mid and small cap. In fact, I think Kotak or someone has stopped accepting money in the small cap only, purely because of the fraud that is there in the mid and small cap. And one has to be extremely, see, as I told you, it will surprise you. It will happen when you expect the least. And that's the beauty about the market. And at that point of time, we don't want to be too late, because in small cap, the problem happens. If you want to exit, you may not be able to exit at that price. In fact, SEBI came out with the guidelines saying that, suppose if tomorrow there is redemption in your small cap and mid cap fund, please mention what could be the impact cost in your exiting, because you are taking at the closing price. But जब आप बेचने जाओगे, because you are holding so much percentage, some mutual fund owns 7 to 8% in a small cap company. Assume that 7 to 8% goes for sale tomorrow. Will they be able to realize the same price that is being mentioned in the NAV? The answer is clearly no. It would come at a substantial discount. If that's the case, does that NAV that looks on the paper, will it actually materialize in the real life? The SEBI also seems to have shown concern there, and one should never second guess the regulator. That's a learning I have always done in my life. So never second guess. I think there is a reason why SEBI instructed to the mutual fund. There has to be a genuine reason that has to happen. And we did it because we don't want to, we want to be, even if we are making earning basically on the quotients, we want to be play little safe. We don't want to be basically take too much chance. Having said that, we are not pessimistic on Indian equity market. Having said that, we are not pessimistic about Indian economy. What makes us concerned at this point of time is that, does it justify to pay this kind of a rich valuation? And that's the reason. And at appropriate time within 2024, we will again move from large cap to mid and small cap, but at the appropriate time. So in the temporary, we have taken shelter under large cap. If you look at last 1 week, the mid and small cap did underperform the Sensex and the Nifty, while Sensex is down by 0.9. Of course, everyone is in red. Let's be a little frank about it. But mid and small cap are down by 1.2%. And I think this kind of trend we may continue in coming weeks also. Only two sectors that close in the green for the week is Nifty Pharma and Nifty Realty. PSU Bank, which has been doing extremely well, was one of the worst performing sector in last 1 week. Now, it just gives a clear-cut indication that, well, investors want to lock in profits. I think they are locking in profits where the scripts have gone up substantially high, and PSU Bank could be one classical example that would have happened. So, our sense is that do expect market to remain a little choppy. We don't expect market to remain a move in a one way. There will be ups and downs, but with downward bias. If you look at the Nifty and Sensex, which is Sensex is hardly up, 0.4% in 2024. This is end of the second month of 2024, and Sensex has gone nowhere. Unlike in 2023, which gave a bountiful returns, and mid and small caps are up by 6.8 and 6. They have come down than what it was there last week. Am I right? Our sense is that the gap that you see between Nifty and Sensex, which is 1.2 and 0.4 and 6 and 6.1, this will get reduced. In other words, small cap will decline much sharper as compared to Nifty and Sensex, or the Nifty and Sensex may go up, but mid and small cap don't rise as much as the large cap would have done. So expect in next couple of months, you see mid and small cap coming under pressure, and due to that, the gap between Nifty and mid cap and small cap should get further reduced. FIs have turned positive, 1,539 crore for the February. And that's a very good sign. Of course, a lot of credit should go to the IPO market, but in a way, they are net positive. Because in the month of January, they were extremely negative. They were negative. Now, there is one point which I must highlight. I think some of you people have shown concern that we have asked you to submit an Excel 3A form. We have been informed by our compliance auditor that this form has to be taken from the investor. And this form is nothing but saying that, you are okay or not okay if you invest in the listed company, says, of a group related. We don't have a listed entity in our group. Neither PMS is listed entity. This rule has been framed for some of the listed company that also has a PMS, like ICICI, HDFC, Motilal Oswal, and so on and so forth. We don't have any listed entity. But since it's a part of a mandatory requirement, we have requested every one of you send an email saying that please submit that. You need to, even if you say dissent also, it's fine with us. Our job is to get that data from you so that we are compliant from the regulator point of view. So if in case if you have more query, please reach out to your respective relationship manager, and we'll be more than happy to guide you in this front. It's just so is there a risk to you by giving us the consent? Answer is clearly no. Because neither we are listed nor any of our group companies listed, and hence there is nothing which even if you sign and say dissent or accent, there is nothing that's going to change in terms of a performance, or the life is going to remain as it is. But from the regulatory point of view, we need to have this document, and that's why we sent in this email to all of you. Please send it back to us as early as possible so that we are compliant in terms of our regulation. With this, let's open the floor for question answer. Diju is saying my PNS account with Mojopms is almost ready. Should I make the funds available now or investment or wait until you advise me to when to invest? Diju sir, my request would be please go ahead and invest. Don't unnecessarily wait because then we are trying to time the market. What we said last time, in case if we wish to make additional investment, then we will tell you, but you should not hold back your PMS journey by not doing that, because sometimes if the market is down and for some reason even if we ask you to invest, you may not have guts to invest at that point of time, and I don't want you to do that. So please go ahead and invest. Any additional investment, yes, we will come back to you and tell you when to do that, or we will tell you please start investing in a staggered manner rather than at one go. Abhijit, Jai Jagannath, Abhijit ji. Currently, the practice of updating transaction details of the last day of the month raises concerns about the potential misuse, particularly when transactions are conducted close to the end of the month. To address this, I propose that updates schedule wherein transaction details are automatically updated in 15-day trailing period to the last transaction date. The rationale behind suggestion is that to introduce cool-off period that allows sufficient time between the actual transaction date and is disclosure and better monitoring of the user as well. Currently, 1 month wait is too long for me. So I think, sir, I don't know what you wish to convey. You are suggesting two contradictory things. In the first part of your question, you are saying that suppose if I bought something for you on last day of the month, it will get disclosed to you immediately. Why? Because at the end of the month, this is so. So you are saying that's amount to a misuse. People may misuse that information. That's what you are saying in the first part of your question. And the second part of your second, the last statement, you are saying 1 month is too long. So I'm getting a little confused what you wish to convey. At the same time, you are saying you have 15 days cooling off period. Trailing is one thing. Now that's a good suggestion. I must tell you that 15 days is a very good suggestion, Avijit. But the problem is that this is an industry practice. Disclosing, because if I do 15 days, problem would happen. Suppose if I bought one company on 1st, second company on 10th, and another company on 25th, you will never come to know the exact portfolio value. Why? Because every script will have 15 days. So आपको पता ही नहीं चलेगा आपका portfolio कैसे चल रहा है, कैसे चल रहा है, construct किया है, because I'm delaying by 15 days. By giving you at the end of the month portfolio, at least you know where do you stand in terms of what are the stocks you are holding and not holding. So in a way, it's a much better way to have this, because otherwise you will always not having ever a updated portfolio. Why? आपको पूरा picture नहीं मिलेगा portfolio. Suppose if you are buying every 10 days or 15 days, because we'll be disclosing that holding only after 15 days. So it's a good practice that at the end of the month, every month, and this you can store also in your computer and your laptop. So in case if you wish to refer to that, in future, at least you can able to refer that. And there is a consistency, because every month and you have this data made available. Your concern about potential misuse, so whatever transaction that we do through the exchange under your name. And hence, because that's how we compute the capital gain tax also. So that's how it works. So I don't think this will get misused by, at least not by us. I don't know, when you say get misused by whom actually? It's not that, we want to manipulate the numbers before we disclose your portfolio to you. We will not do that. And we have never done, we will never do it. What in your transaction are get recorded at the exchange level, at the custodial level. And if that is though, we can't do any changes there, because SEBI will pull us very badly in case if we are doing something like that. So there is no kind of misuse that can happen from us. Even though we are disclosing at the end of the month, assume that whatever transaction we have done has been done on that particular day at that particular price, and hence there cannot be any misuse from our side. Tejaswin, Namaste. Assume my 50 lakhs gone to 60 lakhs on March 30th. Now a profit share is based on the certain percentage. Now, whether you will sell a few shares deliberately to take your charges using the high watermark or wait for some sale call was based on IP and later deduct your percentage of profit selling. Also, is my ICICI brokerage be charged separately or is it included in your fixed percentage AMC? So, Tejaswin, you have asked two questions. So let me first answer the profit sharing, performance fees. For performance fees, we will deduct, we will create the liquidity by selling shares if the liquidity is not available. Based on the IP, we will not wait for sale transactions to happen because we don't know whether that will happen in 1 month, 2 months, 3 months, 5 months down the line. We don't know. And hence, as a good practice, we will create liquidity by selling the shares. Now, some of our investors did suggested us. He said, you tell us what are the fees, and one day before that, we will do AI. And if the system AI is available, that the cash is available, then our system will not generate sell advice to take the fees out. If you wish to do that, you can definitely do that, but that will amount to as an additional investment, and hence it will make your IRR. So because sometimes some people got confused, but then what happens to the IRR? It will get added to a, we will show this as an investment, not as a the fees, whatever the amount. For example, continue with the example, 50 lakhs becomes 60 lakhs. You made 10 lakhs, we will charge you 15% profit on that 1.5 lakh. So suppose if you put 1.5 lakh additional investment, suggesting us that we should not sell any shares from the portfolio, then we will assume that your investment now is not 50 lakhs, but 51.5 lakh. Am I right? And that's how the system will work. And the same way, the high watermark will not become 60 lakhs, it will become 61.50 lakhs. So you understand what I am trying to say. And Tejaswin, if you are not still clear, please again put your question. I'll be more than happy to answer that. Now, second part of your question is that also my ICICI brokerage charge separately or is it included in your fixed percentage AMC? This is a fixed percentage AMC that we have talked about 75 bips or 100 bips is nothing to do with the brokerage. Brokerage is based on the buying and selling of the stock. Am I right? So that is not included in a fixed phase. And our brokerage is only 0.1% plus STT. That 0.1% includes all other charges. And what are all the other charges are included? Let me explain you that also for the benefit of everyone. So all other charges includes exchange transaction charges, SEBI turnover fees, GST, and stamp duty. This is all included in that 10 paisa. Over and above that, there is a 10 paisa ka STT. In other words, your transaction cost is 0.2% total. That includes everything in terms of charges, GST, SEBI charges, and exchange charges, and everything is included in that. George is saying received an email with subject annexed required for civil regulation consent for investment security. Could you please explain what needs to be done and the reason? Thank you. So I did mention, sir, in my opening remarks that ideally we should have sent you that document along with the form only. Our understanding is that since we are not listed entity, nor any of our listed companies are listed, this document is not required. But our compliance auditor came and said, no, this is required, this is mandatory, despite you are not listed entity, nor none of your group companies are listed. It's more of a formality, to be very honest with you, than anything else. Someone I spoke to today in the morning, and he basically wanted to get more clarity on that, and I spoke to him. He said, can I put a dissent? Well, yes, you can put a dissent. There is nothing. It is just the formality that, is it going to change your previous returns? The answer is no. Is it going to change the way we work? Answer is no. It's just a document which is required by, I'll give you a very classic example, and I was so frustrated, I'll tell you that. I have few shares in physical form, which I need to convert in my demat form. Now, can you imagine what kind of documents they need? they need my cancel check. They need my client master list. They need my Aadhaar. They need my PAN. They need my what we call that request for dividend. Mullah, I don't understand the logic. I'm giving you my cancel check. That means bank could have done my Aadhaar and PAN verified. If I'm giving you my CML, the client master list, are you suggesting that my KYC has not been done by the DP? If that is so, why do you need this? Anyway, I'm requesting you to transfer to DP. The demat करने को बोल रहा हूँ. How are you concerned as a company? Basically, why do you need so many documents? And top of it, they have given so much a long list of that. It was so frustrating. So sometimes some documents are required just for the sake of requirement. And this is something very similar. In fact, if you ask me, we internally debated also, should we actually need this? But then we spoke to some of the other PMS, those who are running that, the leading one, and said, Sunil sir, even though we are also not listed, none of our group companies are listed, still we are taking this form from our customers. Our compliance auditor also suggested, and that's why this is more of a formality that we are taking it. So please submit it through an email, that's fine. In fact, in the new form, now we actually inserted a physical document only, so people need to sign that. Dipali, sir, moments of scripts of profit booking is not smooth. I think it needs to be improvement. My observation is that almost all case response was late due to the which 10 to 15% of profit was lost. Kindly provide comments, please. So, Dipali ji, there are two kinds of profit booking that we do. And previously we used only one kind of profit booking because the market was smooth and we did not expect market to remain volatile. So what in that, so there are two kinds. So let me explain this one kind of profit booking. In one kind of profit booking, what we are doing, let's say always be applicable 24/7, 365 days, where the script has to keep going up and we will keep writing the script going up till it goes up. And then it starts falling by a certain percentage. There is a threshold. So there are certain buckets we have defined. So and so to so and so percentage, this must fall. So and to so and so percentage, this much fall, and so forth. So when script happens that way, we get out of that company. So the idea is that we write the upside, but moment the script starts losing that kind of a price appreciation, we'll get out of that company and we'll lock in the profits. This was there from day one when we launched the PMS. Very recently, we launched another profit booking mechanism. And that profit booking mechanism has been applied to the mid caps, not to the large cap. Large cap mein wo chalta rahega, which I explained to you. If the script goes up and then it falls by a certain percent in that bucket, then we'll trigger the profit booking. In mid cap, we have now put a very standard threshold. If the script goes up by so and so percentage, we'll lock in that profits come what may. Purely because we are little concerned with the fraud in the mid and small cap. And small cap, we are anyway, is a conscious call that we have taken, whether at profit or whether at loss, we will move out of small cap and move to the large cap. So that's exactly. So Deepalaji, if you think, we are not still doing a good job, please write to me giving a specific example, and we are more than happy to look into this. If something further can be improved upon, why not? Because not only it will benefit you, it will benefit all the customers at large of PMS. But right now, this is what the strategy. Just to explain, large cap based on certain threshold, mid cap predefined threshold. That means वो हर एक उस पे वो निकल ही जाएगा. And small cap, irrespective of profit or loss, we are moving to the large cap. Balaji, Mojopms reduce my work to buy and sell and also my stress. Just see my monthly performance and sit back. As we discussed, choose the right person for the right work and sit back, which was said 2000 years by the great Thiruvalluvar in Tamil. Balaji sir, what you said is absolutely right, and that kind of a maturity each and every investor should have. I remember you bringing book for me, and I've kept this book on my desk. Whenever I get spare time, I go through that And of course, I don't go to in a very this one. I just go randomly. I pick up one page, look at that, whatever the saying are there, and I see, and so relevant that thing. So you are right, actually. That's the way it should be. Wealth creation is a long-term journey. It's not a short-term journey, and one should not get too much fearful or so greedy in this. The power of compounding will work only and only if you apply for the long term. In fact, someone suggested about, fees, do you get out or not? And he said, that's exactly, we don't want you to do that. That, you sell some shares to get the performance fee. Because that power of compounding will not work. And he said, I'm willing to pay additional as an AI, but please don't sell shares because I want power of compounding to work. The longer the period, higher the amount, the better the power of compounding effect would be on the wealth creation journey. So, Balaji sir, thanks a lot for putting trust and faith in us. And if you happen to visit Bombay, would love to host you again in our office. Now, Dr. Hiren, sir, how much minimum amount add in PMS? Can I add 1 lakh quarterly in PMS instead of I have mutual fund instead of 30,000 per month? Currently, I have running of 30,000 per month SIP fund. So can I stop it and add quarterly 1 lakh in a Mojo Infinity PMS? Yes, definitely, sir. You can do that. Yesterday I was talking with someone. We are also looking at putting money through SIP, and I think we will do that also. We will announce very soon because we did some back testing and we realized that SIP does not actually compromise the returns. Because when we are doing in PMS, it was a different case if you're giving in the infinity because the impact cost is coming out to be too huge for the investors. So right now, Dr. Saab, please do that without any hesitation. You can stop the SIP in the mutual fund and you can put 1 lakh every quarterly. Okay, Ravindra Singh, Sunil bhai, please explain. Exercise 3, client consent descent for investment by portfolio manager in the related party. Ravindra sir, I did explain that in my opening remarks. I did explain when George asked me just the benefit of, again, for you and everyone, this is just a formality that we need to do that. We are not listed entity. And since we are not listed entity, there is no way we can have a related party or associated party investment in. SEBI guideline clearly said PMS cannot invest in unlisted entity. So even if you wish to invest in any of our associate company, we cannot. It's not allowed. And since we don't have any listed entity, question of investment related parties don't arise only. But this is more of a regulatory requirement. That's why we are seeking this consent from you. So please send an email to us, and that's fine. That's the only thing you need to do. And there is no change because of that in the PMS holding returns, or there's no impact on the performance of the PMS. Let me put it this way. Anil is saying how much weightage of large cap is then BSE 500, which is our benchmark. Approximately little old data is fine. So my sense would be near about 80-85% would be large cap in BSE 500. The weightage would be. Now the question that may arise, then why are we looking at BSE 500 and why not any other index? So SEBI came out with guidelines some time back because every fund manager was using different benchmark, which was creating a lot of confusion. So SEBI said there are 3-4 baskets available. Please, we can choose from that. Now, since our is a flexi cap, am I right? We were 60% in small cap once upon a time, and today we are 60% in large cap. And we can't keep changing our benchmark every now and then. And hence we said over a longer period of time, BSE 500 is the best benchmark that we can select. So that's why I've selected BSE 500 as the benchmark. But 80-85% should be the large cap of the large cap weightage in the BSE 500. Sumit is saying, okay, Sumit ji, I think I've answered this question. So I think that explain you that that please send us this. There's nothing much to read about it. Even if you want to say dissent is fine with us, please do that so that we have just complete a format. Our job is to give you that document, you accept or dissent and send it back to us. But there is not going to change the construct call of the portfolio anything. Nitin is saying, sir, would you suggest also to move out to small cap mutual fund, mid cap mutual fund? So there are two ways you can look at it. Okay, if the market volatility does not basically bother you much, then remain invested, because eventually they should outperform very significantly the mid and small cap as compared to the large cap. Now, challenge what I've seen, Nitinji, is that most of the mutual funds within small and mid cap have underperformed their benchmark. And this is not my data. If you go to MFI website and they've given the performance, you select 1 year, 3 year, 5 year period, and they've given return versus the benchmark. And in most of the cases, they've underperformed the benchmark. So my worry is that the mid and small cap may do well, indexes may do well, mutual fund may not do well. And that's why, so we also in our PMS, we are not saying that we will remain invested in large cap forever. Most probably in 2024 only, we will again shift from large cap to mid and small cap at the appropriate time. But right now it does look little frothy. And if that's look frothy, you may possibility that you make a little panic. Okay, what's happening to my portfolio? And then may you do something which you are not supposed to do that. Problem क्या होता है PMS में you want to see your portfolio daily. Mutual fund में you don't want to know, you don't know the NAV also. How many investors look at the NAV on a daily basis? कोई देखता नहीं है, am I right? So that's the problem. So in mutual fund you basically consider this more of a passive investment. Why? Because आपके पास कुछ है, आपको पता भी नहीं चला क्या लिया क्या नहीं लिया. How many times you know that your mutual fund manager, what he bought and what he sold in your mutual fund scheme that you are owning? पता ही नहीं है. पर PMS में आपको सबको जानना है कि उसने क्या लिया, कितना लिया. That's the thing. So that's it's more like in a way it's a more of an active involvement in the PMS, and that's when there is active investment kind of an approach from the investor. Investors do get little emotional, maybe fear or maybe greed. And that's why we are doing what we are doing. But in mutual fund, you are more of a passive one. आपको पता भी नहीं क्या हुआ क्या नहीं हुआ, तो you may continue to do that. But remember, probability is very high that they may underperform over a 3 to 5 years to their respective benchmark. So now that's a call that you need to take, Nitinji, whether you want to remain invested in small and mid cap mutual fund, even though the mid and small cap may eventually do well in 3 to 5 years, or you want to move that money to the PMS and basically generate higher alpha on the portfolio. K.S. Brad sir is saying how much market case is expected experience considering everything. So Brad sir, I have never ever used the word crash. I have said use the word corrections. Okay, so don't crash is that means there is a more of a 30-40% kind of a price correction, price crash. I'm looking at the word corrections, and time and again, I don't expect market to fall more than 10 to 15% maximum. That's a maximum that we are saying that can fall from this level. In case if that happens, the bounce back could be equally sharp. Okay, so it will not allow many investors to re-enter the market in case if they are sitting on the fence. So that's the thing. I don't expect crash. I just expect perhaps corrections in the market, which is a healthy corrections. Why I'm saying healthy correction? Because that will make a very nice base for the next leg of rally, and we need that corrections to make market healthy. For some reason, if the correction does not come, and market keep moving up and up, it's going to make more and more dangerous for the equity investors, because as and when that correction will take place, it will be so sharp that it can break a lot of investors' confidence also. So we do not wish that market go up from this level. On the contrary, it gives healthy corrections, making a nice base for the next leg of rally. Nilesh Singh, GDP numbers have been released, betting the estimate can the floating valuation concept be reduced to some extent? So my sense is, sir, I don't know whether GDP number has been revised upward. My understanding was the GDP number has been revised downward. That's what my understanding was. Has it been released? Let me just see now, because you are saying so. Let me just see GDP numbers, Because my sense was that it was going to get revised downward. GDP numbers. Okay. You're right. GDP is number has gone up. Is gone to 8.4%. That's what we are. That's you are right, sir. So it has been move up. Now your question is that should it the valuation should get it reduced? Even if you assume that GDP, if you look at the market cap to GDP ratio, on an average we are commanding near about 80% or so. Okay. Even if you look at the FY 2025, not 2024, FY 2025 market cap to GDP ratio, we are still at 120%. Now, of course, Indian market should command better market cap to GDP ratio as compared to what it has been commanding in the past. But should it command so high? And that's where, so despite the numbers coming out better, we still believe that valuations are a little rich. And remember, everyone seems to be saying that the fourth quarter may not be so great. Why? Because of consumption cycle, number one. Number two, the rural economy stress. And since elections are going to start, the date will get announced in next 15 to 20 days, the capex cycle will also come to a standstill. This all culminated into a little not so great GDP numbers for the March quarter. Imtiaz is saying today is the end of the month and still I can't see my stock in my portfolio. Please advise. Imtiaz sir, आज तक का जो लिया बेचा होगा, that needs to get updated in the system. So normally you are able to see by 3rd or 4th of the month, every month. So sir, please have patience. 3-4 दिन में आपको दिख जाएगा your holding, and anyway you are able to see your performance on a daily basis because performance आपको दिख रहा है. खाली holding जो statement है वो आपको 3 या 4 मार्च तक दिख जाएगा आपको. Rajendra Gandhi, dear Sunil sir, love to see you talking and guiding us in this journey. Hope we all create good wealth by staying with you. Yes, sir. The reason why we have come up with a very fees in a manner where we will charge very nominal fixed fees, and we have asked you 15% profit share as a performance fee. Why is that so? Because reason is that because we have a skin in the game. If we don't create good wealth for you, we have no rights to create wealth for us also. And we are so confident that we will create wealth for you in a way, we'll create wealth for us also. But if you look at our structure, to earn 1 rupee as a performance fee for me, I have to create 6 rupees wealth for you after paying my 1 rupee. Why? Because 15:85 ratio. And that's the reason. So we are so confident that we will be able to generate wealth. That's why we have gone with the, in fact, we'll be surprised to know that many people suggested, don't do this. You are playing a very risky game. For some reason, if you are not able to perform, you will not make money, and this one. We said we are very confident because we have no rights to be in the business if we are not able to create the wealth for the investors. Then why should we be in this business? First thing is that. So we don't want to make money at the cost of the investors. We want to create wealth with the investors, not at the cost of the investors. And that's the reason, and we are very confident, sir, Gandhi sir, that we will create a lot of wealth for our investors. My only request to all of you, please have patience. And if you do that, you will see the power of long-term wealth creation, power of compounding coming into your portfolio, and you will not imagine the kind of money you will make. आप नहीं सोचेंगे उतना पैसा बनेगा आपका. Because we are extremely bullish on Indian economy, we are extremely bullish on Indian equity market. If that is to happen, it has to reflect in your portfolio performance also, isn't it? So we are very confident, sir, we'll create a lot of wealth. I know Amir is saying that there are no more questions from any of our members. I do understand. I think you are relaxing. In fact, I'll give very classical. Someone came to our office and he said, सर एक जगह एक तो आप बोलते हो एक वक्त बोलते हो कि यू डोंट हैव टू लुक एट योर पोर्टफोलियो डेली, दिस इज़ फॉर द लॉन्ग टर्म, ये है. आप हर थर्सडे को क्यों आता हमारे पास? हमको जानना ही नहीं कुछ भी, आप जो करो खरीद लो ना. वाई डू यू बेसिकली वांट टू कम एंड डिस्कस? यू शुड नॉट कम ओनली. बोला इफ आई डोंट कम इन फ्रंट ऑफ अवर कस्टमर्स, पीपल से क्या हो गया, हम लोग है कि नहीं है, काइंड ऑफ स्टफ, यू नो, because we have become a part of this one, and they have views and counter views, am I right? Some investors don't want to come in front of you every Thursday because he said, we have given you money, you are doing a job, we are able to see the performance on a daily basis every month, and we are able to see what are the holdings are there. Even DP is sending us an email saying that what are the holdings we are having in our PMS with Mojopms. So we don't have to worry. Why do you wish to come and spend time with us? They said just focus on our portfolio only. That's also a very valid argument. But I said, since we have promised all of you that we'll be in front of you every Thursday, we will be. Next Thursday, I'm going to make a monthly performance card as we do on first Thursday of every month. So please come next Thursday. The link of this webinar would be sent across to you. So in case those who could not watch it from beginning, this would be able to watch it at leisure. Number one. Number two, the small PPT that I made, that will also be get attached to the email. With this, thanks a lot everyone taking time out. Have a great time. Good night. And tomorrow I am doing equity outlook, first day of the month. And as we do, last month I could not do it purely because of budget. But now, tomorrow I'll be doing equity outlook, and we'll discuss more about how do we see the market going forward. Thanks a lot. Take care.